It's important that the Nifty has gone below the 8,000 mark, 7984 at this point in time. And as the legend is telling you on your screens below, it is the first time since October 28. It's actually across the board now. Most of the metal stocks are once again capitulating. Hindalco is down over 2%, Cipla 3%, SBI 2%, ICICI 3%. I mean, ICICI, this is serious money being taken off the table from a bank that was such a favored counter just about 4 weeks back. Bharti Airtel 2.3. Anybody with big foreign loans or banks which have loaned to these companies are all coming under the hammer. And once again, Dr. Reddy's, a company exposed to Russia, down 1.5%, Axis 1.4%. The banking stocks are private sector banks and SBI are bleeding a goodish bit. Actually, it's across the board, and the bigger falls are coming in the high beta space, the mid caps, which is now down 2%. Nifty racing to a 1% cut, and mid caps 2%.
Okay.
I believe we have Ajay Srivastava with us. Ajay, this is almost blood on the streets, as it were. What is the sense you are getting? We are going to see, 7,800 as a line in the sand, or that getting breached very easily?
I think that's going to be breached very easily, I think, Lata, because all of us are looking at the government at this point of time as to what steps they can take to address the global issues affecting us, and more particularly, for a local domestic one, whether they're going to extend the SOPs to the automobile industry, which is expiring on December 31st. Because if that SOP is not extended, the indication will become that the budget is going to be much more severe than most people thought. That could be, in fact, the final trigger for a big correction is if the government does not extend the SOPs, and therefore we were looking at a hard budget. Having said that, I don't think much the government can do this time. Globally, we are in a major liquidity crisis at this point of time. People are moving out of emerging markets. I'm not sure what they can do, except one thing Raghuram Rajan can do is very clearly he can come out and say the interest rates are not going to go down in a hurry. And I'm quite sure about it. That again is not going to be taken lightly by the market. So 7,800 is easy, 200 points is easy on the take. It's just that I think there is a breather happening today or tomorrow maybe perhaps to look at global markets. But if the government doesn't extend the SOPs, or if the rate increase signs comes through, that is not going to, rate reduction not going to happen, you will see this market 200 points is easy for the taking.
There's some serious profit taking in the broader markets as well. So in names like TVS Motor, Glenmark Pharma, Jubilant Life Sciences, all good quality names that have run up a whole lot. Ajay, from your tone, I could get that you're cautious now. But at what point would you start to accumulate some of these good quality names that are correcting quite a bit?
Sonia, I was cautious when I last spoke to you.
Yes.
I was very cautious that time. And in fact, I am relieved today that the caution looks to be okay. See, I think accumulation is not a function of domestic factors today, Sonia. I think accumulation is a function of the theory that somebody else is going to buy the stocks in India in a very quick fashion and take the prices up. And because fundamentally, we are maybe fairly valued or overvalued to that extent. So there are no pockets of undervalued stock. I think the pocket is whether FIs, investors are going to come in and start buying afresh in the New Year's. On that, I think there's a grave doubt, because at least till the Russian crisis plays out and we know what's going to happen there, I doubt very much capital is going to be committed till at least the 15th or 20th of January. So you've got a clear month where there will not be many major inflows, but people will profit book. So I think even if you want to bottom fish, which we love all to bottom fish, I would tend to believe that around 15th, 20th January would be the right time to do it rather than doing it today.
Okay, Ajay, let me get Anuj also into the conversation. Anuj, it was looking bad from the start, but 8,000 being taken so easily.
As we said, 8,000 was only a psychological support, not a technical support, Lata. And the pace of the decline, it's on an average 75 points a day. And that's something that we were discussing. At the end of the day, there's no point being cute about this market. If globally things are unraveling so much, things would happen this way. And but just one point, Lata, on ICICI Bank in particular, that's one stock which has seen really relentless delivery-based selling for last 2 days. And the market is getting worried about that stock. So, in fact, that's something that maybe we can ask Ajay as well. Ajay, your call on banks, because clearly that was one pocket which was holding out in the first part of correction, but you get a sense that that is where the maximum damage would come in the last leg of correction.
One is, of course, that some of the institutions that you're speaking about have exposure to Russian market. So, which is, I don't think it was exited in time, so that could take a huge knock. That's one. Number two is banks are where the maximum profits are with investors today, Anuj. And therefore, you would tend, even if you want to compensate, do margin calls or whatever you want to do today, the only place you can sell is banks. And you are very comfortable in selling the banks today because you know the fact that they are stretched in terms of valuation, they are stretched in terms of the portfolio quality. And number two, the rate reduction which was expected, I think is going to be put on hold in my view. I don't think so given India's BOP and the balance sheet. The governor can take a big risk of taking a huge reduction in interest rate when globally every country is defending the currency by taking interest rate up. So that is going to be one of the biggest negatives. So you could be comfortably booking profit in the bank with the knowledge that you can get back to it much later, maybe a month or now, at a much better prices.
Actually, now it looks prescient that he did not cut in the previous policy. This is looking very eerie. But Ajay, now is there shorting opportunities even further in companies that have merely borrowed in dollars in the past year?
See, as I said, shorting is a little dangerous tactic because, in my view, Lata, because these kind of cut downs also have a tendency to bounce back very fast. There could be spikes, there could be anything. So I would not tend to be a great short in this market, particularly coming into December where even low volumes can give you a spike up in the market, a few government announcements here, a few global announcements. The key is the US is still a positive economic trigger in the whole system, which is also negative for us because people want dollar assets. But it can actually pull the economy, the world out of what we are encountering today. So I'm not sure whether shorting is the right strategy today. I think liquidation of profits, if you have profit left, cutting your losses would be the better strategy. Shorting could be very dangerous.
So if the Fed were to sound dovish today, you think that bounce could be even advanced?
Sorry, beg your pardon?
If Janet Yellen were to sound dovish at the press conference today, you think that, we could even be at perhaps the last few points of the fall?
See, the US Fed being dovish, I think, is inversely proportional to what's going to happen out here. Because if they are, going to control their inflation in a manner that, and dovish means you're saying that they will keep a low interest policy for a longer term.
Yes.
I think that's what you're talking about.
Yes.
This gives you a lot of stability in the U.S. market, but it still doesn't take away from the fact that people still want dollar assets. The government treasury yield in the U.S. is about 2% or thereabouts. It hasn't gone up. So I'm not sure dovish stance of Fed is going to do anything, but it can certainly calm the markets down. So there is easy money in the U.S., the biggest economy in the world, coupled with ECB, I think. ECB could be the next big trigger which will come up with the next big tranche of QE coming out of Europe. I think that could be the biggest trigger. That is why I think shorting is not a good strategy because with ECB sitting on the sidelines with the QE almost inevitable in the month of January and you said dovish tone out of the US saying we will fund the economy, etc., some stability in Russia could see a spike back very easy. It won't be long for the equities to travel back down. But for the short term, you could see a spike, and that's why shorting is not really recommended.
Okay. Ajay, do you believe that we are still in a long-term bull market, an India-specific bull market, and sometimes these global-induced corrections then are great buying opportunities. So, from portfolio point of view, is this presenting a good buying opportunity?
No, Anuj. We are of the theory that I think we'll have to wait for the budget, and one is wait for the budget to see what is in the government's kitty. Because there is a worrisome issue there. There is a worrisome issue on the India's BOP today because the numbers should come out, I think, this week. What's my composition of my balance of payments and my reserves? How much debt I have on the books of the government of India in terms of foreign currency debts. And the third most important aspect is that, the expectation of governance, growth, reforms is all getting kind of just washed away in this morass of religious fervor which is unimaginable. Nobody thought it's going to happen 3 months back. So I'm not sure today reform agenda is on the top of the priority. The opposition has got into the act. We are all over the place today. And that's why I say the trigger is going to be the budget and what the government does in the next 2-3 months. This could be a good opportunity to nibble, but certainly not to overinvest and be 100% in the market. I think you will get these shares at a better prices than even what we are seeing in this correction.
All right. Point taken, Ajay Srivastava. Thanks so much for joining us.